Good morning. Yesterday was a busy day, and I did not get a chance to come to the charts and look at 9 o'clock and see what I could have taken. I did get on a little bit later, somewhere around like 11 o'clock. I didn't record anything, I didn't do anything with that. I actually just finished up yesterday's video this morning while I was waiting for my appointment to be filled. We're gonna hop on the charts now and take a look. I think I was only in 2 trades yesterday, if I remember correctly. That's just how life goes. If you find yourself feeling like you need to be on the charts, you need to be checking it, understand that feeling probably comes from fear. You're afraid you're going to miss out on a trade, or you're afraid that your trade is losing. Hardly ever would you be afraid your trade is winning. So you would be operating from a place of fear. Not a good place to make decisions from. Just realize that. Go ahead and start with SPX 500. It looks like, I don't know, did I take a win or a loss on that one? Probably a win. If we were to drop down to the hourly time frame, yep. So it hit take profit before it came back and hit stop loss. So back out to the 4 hour though, because that's what I'm looking at to see if I could get into a trade. By all technicality, I should be in a buy here. So we're gonna go ahead and do that. Now, given that I've seen how everything is, where we're at right now in regards to price, I'm going to make a little bit of a judgment call here and put it below the previous low of the other candle and still go for that 1 to 5. There we go. Let's stick with that. Create limit order. I always forget this. It's 11. So I could do 11. It actually sat there. Cool. Great. We're going to buy that one. There's that. Moving on to the next one. DE30. Hit take profit. It's already moved too far from the 5 o'clock candle, which, I mean, by all technicality, I wasn't doing the 5 o'clock candle for the most part because I'm usually not up at 5. So SPX 500, I probably should have left alone. Let's go ahead and we'll do that. I'll wait till 9 o'clock and do something with that. So if this candle closes bullish, then of course in the next hour and 45 minutes, I will take another buy. And then let's move on to the next one. JB225, 5 o'clock. No, yeah, 5 p.m. candle actually got in on that one. That's what the arrow's for. That one went against me. That's cool, great. We'll wait till 9 for the next one. Looks like gold is one that I'm still currently in, and it's just been going sideways. Let's remember this as we look at this trade right here. It had an opportunity to go up. It came all the way back down. It had 2 opportunities, it looked like, to go up, and it still hasn't. Put that in the back of our mind as we move towards natural gas, because that's what reflects back in my memory. Is this looks very similar to what natural gas did to me, and so I don't know how I want to feel about that. Silver ended up hitting take profit. Good, beautiful on that one. West Texas oil was a stop loss, almost to me. Wow, look at that. It was like, I'm gonna roll over on you here. So that was fine. And then natural gas. Here is where we go with natural gas. So the 5 p.m. candle actually worked out for me for natural gas. I ended up taking a win on that one. But here's what I'm talking about. This previous trade, we were in for the long, I say we, but I was in for the longest time. It had multiple chances to go up and almost hit take profit, but it didn't, and it rolled over on me. And so this would be one of those things that as you see it over and over and over again, once you're in a trade long enough, you might get that feeling like, I just don't feel like this is gonna work out. The beauty and benefit of that feeling is that's part of building that intuition. You've seen, for some reason, you don't know why, there's really nothing you can say to look at it particularly. I mean, you can try to convince yourself on a chart and say, well, this is why. But you may have plenty of them where it's done that and it actually worked out for you. But you'll get feelings that'll help guide your decisions. The beauty of it is if you don't feel like it's going to go up anymore, then that's a good indication. Even if you had, even if you were like 50-50 on whether or not they work out or not, for your sanity and for your peace of mind, it would be better if you felt more confident about a particular trade and stayed in it than if you didn't feel confident at all and you lost. Those trades tend to be the ones that hurt your psychology the most. And so be careful not following what your intuition is telling you. That intuition feeling, I shared yesterday. It might have been Sunday. I lost the biggest trade of my trading journey at all. $2,800 gone, just like that, just gone. And it didn't make any sense for me because everything was completely and totally hedged. I had plenty of margin available. It doesn't make any sense. Now I understand, there's all sorts of other things, little nuances that could probably make it. Like CoinEx is going to look into that. Chances are they're going to be like, yeah, no, that was legit. It was closed out for a particular reason. It was closed out to save the account or blah, blah, blah. I don't know whatever the reason is. Don't know. Technically, I don't really care. Because it's that intuition, here's what it was. I think I've talked about this before, but I had gotten into such a huge drawdown because I was practicing this new management style with hedging and all this other stuff. But I had actually taken that same amount of drawdown, the same positions, and I had put it into FX Replay, which I don't have a subscription. I just tried it for that one time just to actually test it out, to see if I could work myself out of the hedges. And I did. And although the overall time frame that it actually happened was over 6 months, and there was a whole patience thing going on there, I felt confident I could get out of the hedges. All I needed was time. So when I took the loss, and I'm still, by all technicality, I think I'm done processing the loss. It's like, it is what it is. And I felt confident I could do it. I have no idea why it went against me. So it's like, it's not, yes, my mistake got me there, but it's not my mistake that actually closed it out, which I'm okay with. And I think that's what helps, is the fact that I felt confident that I could work out that trade. If I didn't feel confident and I still stayed with everything with this idea of, ooh, I hope it works out, I think I would be a lot more detrimentally affected by that loss. Right now, I'm not. Right now, I've started up another $1,000 account, and I'm up to I'm up $600 in it. So I'm up to $1,600. This is as of Sunday. So it's like, this did not affect me. I am right back into the markets, taking the trades as I normally would. I'm not changing a darn thing, with the exception of not making the fatal mistake that I made with the previous hedging. So I've learned from my lesson, and I'm applying it moving forward. But that's the key. I'm moving forward. Plenty of times we'll hit these losing streaks and we'll look at our strategy and go, oh no, it's not working. I need to change something. No, if you are just starting out, you need to keep doing the very basic, simple thing that you're doing, because you need to get that data to see maybe a 5, 6, 7 trade losing streak is about on par for the strategy that you do, and the way that you look at the market, the way you interpret the market, the way that your risk management is handled, the way that your position tolerance is done. Maybe a 5, 6, 7, 8 trade losing streak is on par for that. Maybe a losing month is on par for you. On average, most traders have 3 or 4 losing months a year. Nick did a poll of all of his profitable traders, and a big majority of them were less profitable for a majority of half of the year. They would have 6 months of down months. You have to know that about your system. You have to know that about your system so that you know whether or not you yourself can handle something like that. Because if you can't, then you need to find something that gives you better returns. Maybe, and obviously they're profitable, which means they are making way more on the profitable months than they're losing on the losing months. And that for them works. If that doesn't work for you, you need to find something that's less profitable in the profitable months and just is continuous throughout the year, so it gives you that sense of whatever, that sense of peace. If you've ever heard in debt management, whenever you're talking about trying to get out of debt, Dave Ramsey talks about the snowball effect and taking the smallest debt that you have and paying that off first and then rolling that into the next one. Just money management 101. One way to get out of debt. But if you think about it mathematically, that's not the best way to get out of debt in regards to what could be the most money savvy. The best thing to do would be to tackle the one that has the highest interest rate. So if you have a $2,000 credit card that, I don't know, maybe you had a beautiful interest rate, it's like 7%. But then you have $28,000 on a 21,000 or 21% interest rate, you should want to tackle that one first to get out of that high interest rate and stop paying so much in interest. But that's some people's mindset, is they need to tackle small stuff first to get that sense of accomplishment. And having the mindset of, oh, I'll save money in the future, does not jive for them. They can't stick to that. You need to know what kind of person you are. In trading, in debt management, in life, in order to understand how you might respond to certain situations. Because if you can pre-plan some of these things, you won't get caught off guard when they happen. You can already pretty much assume and put things in place to help you out. So trading's one of those things. If you're in this journey, you need to figure that out. I mean, one way generally, if you're here in America, Americans, we love debt for whatever reason, and we are really good at staying in debt. So look at your debt to income ratio. Look at what you have as far as owing other people, and how would you tackle that? Can you tackle that? Are you going to do the lowest balance first, or are you going to do the highest interest first? Can you maintain that? Which one are you going to go with? Do you get a sense of accomplishment by tackling the little ones and then applying it to the other one? Or do you get a sense of accomplishment seeing the price numbers go down, even though it's still $21,000 owed, and now you're down to $20,000? It's like, sure, $1,000 off, but it's still $20,000. But that still gives you a sense of, yes, I'm doing it. If that's you, then you know a little bit more about yourself. So get out there. Get in trading. Find out stuff about yourself. Trading is going to teach you many things about yourself you did not know. It'll teach you that you are fearful in times you didn't think you were going to be fearful. It'll teach you that you're greedy in times that you didn't think you were going to be greedy. Impatient when you thought you were the most patient person. It'll teach you that you don't know what you think. You don't know everything that you think you know. It'll humble you. And so get out there, get in the markets, trade. Learn something about yourself. If all else fails and all you did was just learn to be more patient, learn to be less fearful, learn to take more calculated risks, but you weren't successful at trading, that is still something positive you got out of the ordeal. None of this will be for naught. So get out there and do it.
I am really bad at this 1 o'clock, 9 o'clock thing. So here's what I did for a couple of these trades. SPX 500, it had already started pushing. I'm like, okay, fine. You know what? Let me play with the sell limit. If price just happens to flex back just a little bit more, then it'll trigger me in. And I would be in this trade as if I would have taken it at 1. DE30, already in this trade, not exactly going in the direction that I want. JP225 would do the exact same thing. It had already pushed beyond, so if it can come back, trigger me in, we'll be good to go. Gold, still just doing its thing. Once again, comparing that to natural gas, we'll see. I would love for gold to go up, but if we're going to follow what natural gas did the last time it went sideways like this, I don't know. It's a 50-50 shot, right? Silver got really close to the take profit and then backed away. We'll see if it continues down. I don't know. If I look to the left here, we have a support area here. So if it was being pulled to that support area as a possible area to bounce in or break through, then by all technicality, I should hit my take profit with ease. So we shall see. No promises. I'm not too concerned about that. West Texas oil, still hovering roughly around the break-even mark. So we'll see how that one goes. And then natural gas. Natural gas, I was able to get in. I got in at a better price as the 1 o'clock candle had pulled back a little bit. So if it's going to continue up, then I have no doubt it'll probably do it with power. Anytime that I've seen natural gas move, if you look at the time downtrend here, power, uptrend there, power. Now granted, you have these two where it completely reverses, gotcha, but I don't know. Sometimes once you get a powerful move, they seem to continue going in the direction it's going to go. So that's what I'm going for. That's what I'm hoping for. I guess hope, if I'm going to use the right word. Yeah, that's what we got. So that is the competition as it sits. Sometimes you forget that you're trading, and I don't know, life just goes on around you. So we've been sitting around, we had dinner together, we went out to Dairy Queen and got some dessert, and then we're sitting around playing, I think it's called like Hot Takes or something. It's some sort of game where it's topics like president should only have a 2-term limit or shouldn't have a 2-term limit. Do you agree or disagree? And then, you state your case on why you believe what you believe. And so we sat around playing that, and I forgot at 9 o'clock to check the trades and see where everything was at. And so here I am. It's 10:17 right now. Getting ready to finish up for the day. Look over a few of these and see where we are going, as well as just waiting to see what tomorrow brings. So as it sits right now, SPX 500 closed out. I would guess I would be getting into a buy. Actually, let's go ahead and do that, because yeah, it hasn't pushed yet. We'll go ahead and get into a buy here. Stop loss a little bit below this previous candle. I'm gonna go for let's do a 1 to 3, 1 to. You saw what it is, 1.3 or something like that. So this is an 11. Stop that. Nope. Stop doing what you're doing. And we're going to go with a buy. Cool. That one's set. So we are good there. We'll move on to DE30. DE30 finally had to stop out. We are clear there. Oh, lo and behold. Now, I will take another buy. And the thing being, I'm going to have to put the stop loss below the previous candle because of where it's at right now. So roughly about right there. And that'll leave it right where that's at 1.5. So let's do that. Market order there. DE30 can have how many? Where's my watch list? It can have 3. So there we go, market order, buy. We are set up there. JP225 is still active. No concern there. Gold, still active as well. Also, I am fully expecting this to end up like natural gas, like it did before, where it went sideways and then undecided, don't know where it's going to go. But if it wants to surprise me, I will be okay with that as well. Silver. Silver came close to the take profit and then let's turn back around. So that is what it is. Cool. West Texas. Oh, close there too. We'll see how that continues going. And then natural gas, we're already in. So that is all of the positions that I'm currently in right now. If we look at the account is 255,000 and sitting right now floating profit at $467. So, and whatever climbing. So, but once again, all of these could completely turn around and wipe me out, or at least wipe out all the profits, put me back, I don't know, however much it is. I don't know what actually is the risk that is currently out there. I did take notice that there was one point in time I took a trade, and the profit target was like $1,300. Going back through my trades, I have not seen, or from what I'm remembering right now, going back through all these other trades, I have yet to see something that high. That is 519. That's another 5. That's 2. This is that's getting close. 900. That's 400. And then I went too far. And that's 350. So it's like there were some trades where the profit target was really, really nice. And I just haven't seen those again. And I don't know in my head, what it was that got it to that point. Maybe it was back in gold. This is where going back and reviewing the trades is going to give me a little bit of a understanding of what's working, what's not working, what did it actually look like in regards to what was actually risked versus what was actually won. But as uncomplicated as it is doing what I'm doing, I'm not overly concerned about making sure that it is always a X percentage of whatever. It's like, nope, I'm going based upon what they allow me to do in the competition. And if that's $1,000, then it's $1,000. If it's $300, then it's $300. And just letting everything play out. I'm just letting hopefully the statistics of being about 50-50. But the trades that I'm winning, I'm definitely winning more than a 1-to-1. I'm trying to shoot for like a 1 to 1.25, 1 to 1.3. That way my winners are bigger than my losers. And at a 50-50 win rate, that should be profitable long term. So that's basically the stats I'm playing out. And if you've been following along now, then you are seeing the results of that. So that's it for the evening. I'm going to go ahead and wrap this all up and then start fresh tomorrow morning, see how everything plays out over the evening. And I will see you guys tomorrow.